Kyle, I just want to get your thoughts on Hong Kong because it is sort of receded in the news cycle just a little bit. Do you still have those trades on? Anything new related to either trade, this phase one deal, or the Hong Kong situation?
Yeah, if you look at Hong Kong, the answer is yes. When you look at Hong Kong, what you've seen with the enormous protest and revolt against the authoritarian Chinese regime and the failed leadership of Carrie Lam and her government, is you've seen retail sales collapse. And the retail sales have actually collapsed to pre-SARS lows as well as financial crisis lows. So what you're seeing in Hong Kong today is a collapse in their economy. And that's an economy that's the most highly levered economy in the developed world. They have banking assets to GDP at almost 1,000%. That is exactly why Ireland and Iceland and those other countries in the EU collapsed back in 2011 after the global financial crisis. So what you're going to see, Vonnie, in 2020 is you're going to see a full-scale banking crisis in Hong Kong because you've got such a tightly wound economy in a stage of free fall from an economic perspective. So I think when you think back to the U.S. financial crisis, our financial markets, and specifically our credit and mortgage markets, collapsed in mid-2007. Bear Stearns didn't go down till March of 08, and Lehman, AIG, and Fannie and Freddie didn't go down until September of 08. So it takes about a year for the full-fledged banking crisis to hit. You're going to see a full-fledged banking crisis in Hong Kong next.
Do you think we see this in 2020, Kyle, and how are you trying to profit from that?
I do. I think we will see it in 2020. And as a firm, the way that we're hedged for this eventual outcome is we focus on the exchange rate between U.S. dollars and Hong Kong dollars. And so, I think there are a lot of levers that can be thrown by the Chinese and by the failed Hong Kong government to prevent short selling and things like that of equities. So we don't carry any positions in equities, but I'd be careful if you're an owner of a bank in Hong Kong. I'd be careful owning that equity for the next 2 years. I think you're gonna suffer significant losses.
Carl, sorry, just to jump in, does that include HSBC?
Yeah, I mean, look, HSBC, as we all know, HSBC and Standard Chartered in Hong Kong, they've actually been doing the bidding of the Chinese government recently, which is really interesting. If you remember, they were freezing the accounts of alleged protesters and basically freezing their financial transactions. In fact, I sit on the board of a foundation that's promoting the rule of law in China, and they froze our accounts because, of course, we were doing something that contravenes China's national government. HSBC froze our accounts. So it's interesting to see what these British banks are doing, the bidding of the Chinese government. So I think HSBC, Standard Chartered, I think they're all in real trouble in Hong Kong.